and welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batrani. You're watching a fresh edition of Your Stocks, the first one for 2024. A very happy new year to all our viewers this afternoon. Well, joining us today, we have Ruchit Jain, who's the lead research at 5paisa.com, and we have Siddhartha Khemka, who's the head retail research at Motilal Oswal Financial Services, who's joining in to discuss his top picks for 2024. Ruchit as well as Siddhartha, thanks very much for joining in and welcome to the show and wishing you a very happy and prosperous 2024. Siddhartha, let's start with you because there are a lot of stocks which you have picked in your report, which is across sectors. So I'll start with the banking sector. I'll start with State Bank of India, which was one of the stocks which didn't do as well as a couple of its PSU, couple of its peers in the previous year. So let's start with State Bank of India. Why is it one of your top picks for 2024? Siddhartha.
Yeah, very good morning. Thank you so much for having me on the show. So thanks for the New Year greetings. I would wish you all the CNBC staff as well as all the viewers a very happy and prosperous 2024. So coming with the outlook on the PSU banks, I think if you look at the overall financial summary for the PSU banks, at the start of 2023, there was a promise that the return ratios would improve gradually to a sustainable 1%. And that is something that they have delivered. Overall, banking as a sector has underperformed, yes, but the earnings delivery continues to be very well. And we believe that there is a huge room in terms of valuation for upside in PSUs, given that now these banks are gearing to sustainably deliver 1% plus ROEs. And within that, SBI is targeting 1.2% ROEs and 20% ROEs. So with these kind of return ratios and the consistent growth in the core business, the asset quality, we believe that SBI would be one of our preferred picks within the overall banking space. And we could see decent upsides in SBI. So we have recently upgraded our target price to 800, which gives another 20-25% upside from current levels.
Okay, all right. So that's on State Bank of India, where you have a target price of around 800 odd rupees. So you do see further upside there. The other one is from the oil and gas space. Actually, let's take a couple of these commodities together. ONGC is one, and the other one is Coal India. Both of them, what is your target price in both these stocks and why do you like them?
Yeah, so you rightly said now with the oil prices being stabilized, despite what we have seen the geopolitical issues across the world, crude prices, we are expecting that should kind of stabilize around the $90 per barrel mark, which is very positive for some of these the oil producing companies, especially the ONGCs and Oil India. And we believe that a lot of the company is targeting to increase its production to 50 MMTU by FY28 from currently 40. And this will be driven by new projects, ongoing projects, and development projects. So overall, we believe that ONGC with its very inexpensive valuation, improving volume growth, gives a very pretty good outlook if one has to play the oil and gas space. And hence we like that we have a target price of 235, a 15% upside. If you look at Coal India, it's kind of a proxy play on the overall power sector theme that we are seeing that they are witnessing a very strong demand. Electricity consumption in India is at record highs, and on back of that, you have seen not only the power utilities, but the power financing companies as well as the power supplying companies have seen a sharp improvement in their financials. So Coal India is a proxy play, is a direct play to the power sector as it supplies the coal for the thermal development in India. And we are seeing that the domestic power demand is expected to grow at 1.1 times the GDP, and that should reach 1750 BU of power generation in FY24. Coal India itself has been doing a lot of capex to increase the evacuation. Hence, it is targeting a production of 780 million tons in FY24, which will be a growth of 12%. Valuations are very good. Even at the current levels, we have a dividend yield of 5.6%, which gives more comfort. Hence, we believe that Coal India should be the preferred company to play the overall growth in the power sector. We have a target price of 430 on Coal India.
Okay, all right, Ruchit. Well, I'm going to toss all of these three frontline stocks to you in terms of a technical check. So, Siddharth has State Bank of India, target price 800 odd rupees. ONGC is expecting 15% upside, and Coal India also is one of his top picks. So, technically, how do these three stocks stack up for you?
Hi, very good afternoon, Ekta. Firstly, let me wish you and your team and all the viewers a very happy new year. The technical trend still remains positive for most of the PSU names. In fact, if we look at the sectoral indices, then two sectors have which are stood out in 2023 were Realty and PSC and Nifty PSC index, where the returns were about around 80% for both of them compared to December close. So, the entire trend for the PSU stocks still remain positive. We look at the SBI. In fact, SBI is even one of my top pick among for 2024. So in SBI, we have seen a descending triangle getting formed on a weekly and the monthly chart structure. And the breakout was seen recently compared to very high volumes. Now, if I look at the price volume structure, then the price up moves are now getting supported by good volumes, whereas intermediate corrections are not backed by any kind of higher volume sell-off. So this structure is quite positive, and technically the targets are coming around 740 initially. So I think SBI looks a good buy at current levels. 620, 625 was the breakout zone recently. So in case even if we see any kind of minor dip in the short term, then that 620, 625 would now act as a support. So one can buy at current levels in SBI expecting targets around 740. And of course, the oil companies, ONGC and Oil India, both have seen a high top, high bottom structure formation, still no signs of reversal. Earlier, we had seen that a lot of correlation was there related to crude oil. That whenever the crude oil used to go up, then we used to see good positive momentum in ONGC. But it's not the case this time. We have seen that the correlation has reduced a bit, that in spite of when the crude oil prices have recently seen some correction from the highs, the stock prices have not seen any kind of sell-off. So this clearly indicates buying interest in the stock. So I think, yes, even on charts, both ONGC as well as Oil India looks promising even at current levels.
Okay, all right. So that's the view coming in technically. But one of the key themes which is probably expected to play out as we get into election year also, Siddharth, is, probably CapEx picking up. And there seems to be much more confidence, even especially post the state election results, with regards to maybe private CapEx coming through. In that context, how would you approach a stock such as Siemens, which you like?
Yeah, Ekta. So I think industrials as an overall theme is a big beneficiary of the strong capex from the government, which is only continuing. And if you look at the various government schemes, be it Make in India, PLI, the focus on clean energy, railways, defense, indigenization, these are some of the factors which are driving the overall capex theme from a government point of view. So we are looking at both the energy translation related investments, which are driving capex for some of the companies like Siemens, which we like within the overall capital goods space. We have a target price of 4,600, and we believe that the company is targeting opportunities in the domestic market across government as well as private capex. There has been a huge spending over the PLI, especially in the automation as well as the electric transmission related government spending, which should be beneficial. Plus, there is another additional trigger for Siemens, which is the demerger and listing of Siemens India Energy segment, which could lead to some value unlocking over the next 2-3 years. So on an overall basis, we are expecting Siemens EBITDA and PAT CAGR of about 18 to 19% over the next 2 years. And hence we believe that the stock could give another 15-20% kind of returns in the next 1 year.
Okay, what is making you bullish about Hero amongst all of the auto stocks?
Yeah, so I think there are 2-3 factors. A, the consumption discretionary space is looking quite interesting. And within that, we have seen how strong the overall auto packs have been. Coming specifically to the two-wheeler space, we believe that after kind of consolidation, the two-wheeler industry is now set to overtake in terms of growth the passenger vehicle segment. And hence, in terms of our preference within the auto pack, we now prefer two-wheelers over passenger vehicles. There has been a strong recovery in the demand in the festive season, and which has been followed by the strong demand in the ongoing wedding season, especially for the two-wheelers. There was some concern with regards to penetration of the electric vehicles in the two-wheelers, but that is now overdone. Most of the companies have got into the electric two-wheeler space. We believe that Hero Moto, with its expected recovery in the core product portfolio and well-planned strategy to expand in the premium as well as in the EV segment, makes Hero a better placed two-wheeler OEM. Overall valuations again seems to be comfortable, and we are expecting a 20% net profit CAGR. So hence we are expecting 8 to 10% upside in Hero Moto, and we have a target price of 4480.
Okay. Well, one stock which has really taken it on the upside post a good brokerage positive note from Motilal has been Dalmia Bharat. That stock is up around 4%. You have a target price of around 2,800 odd rupees. What is making you so bullish on Dalmia Bharat, and what is the risk to this 2,800 target price?
Yeah, I think you have to look at it from the two perspectives. A, the overall industrial capex that is being spent, that is leading to a strong spur in the infrastructure across India. B, the real estate market has been pretty strong, and that is also leading to strong demand for the cement companies. And finally, on the overall financials, despite the volume uptick, there had been pressures in terms of cost, and hence margins were kind of under pressure for quite some time, which is now kind of easing with the fuel prices, the input prices having now kind of stabilizing. We are seeing with the every passing on of the price hikes, the companies are able to report higher improvement in the overall EBITDA. Now, Dalmia has a strong presence in the eastern and the central regions and is now expanding via both organic as well as inorganic route. We have seen a new initiative from Dalmia, which is the Dalmia 2.0 initiative, where the management has focused on 4 key prioritized areas, which is growth, financial improvement in financial performance, sustainability, as well as improving trust, and overall change in the organizational development and talent. So with that, they are aiming to increase the overall capacity to 75 million tons, which is what is driving the growth for Dalmia.
Okay, all right. Well, those are a lot of the picks that you have shared with us. Thanks, Siddharth, for that. We need to take a short break on that note, but stay tuned. We'll be addressing a lot of your queries on the first day of 2024 on the other side. Stay tuned. Welcome back. You're still tuned into Your Stocks. We have with us Ruchit Jain and Siddhartha Khemka to answer all of your queries. Let's get to the question that we have from Pratyush Khatari, who writes to us from New Delhi, holds 12 shares of Adani Green, which he's bought at around 2,932 odd rupees. There are and 121 shares of Adani Wilmar, which he's purchased at around 718.3 rupees. So he's sitting on a loss on both of these. He wants to know what to do, what are the future prospects of his investments. A lot of these Adani stocks have shown a strong recovery. So based on that context, what would you recommend to him, Ruchit?
So at current levels, I'd recommend to hold on, but no, I won't advise him to hold for a longer period of time. In case of a pullback moves in Adani Green towards 1900 to 1850 range, that would be good levels to exit from the stock. But at current levels, better to hold on. And even in Adani Wilmar, we have seen from lower levels some pullback move has been supported by higher volumes. So further up moves towards 420 to 440 could be expected positionally, where major resistance would be seen in the stock. So both the stocks, I would recommend to hold at current levels, but no, as the stock approaches this resistances zone, look to exit over there.
Okay, and Siddharth?
We don't have any view on Adani, so I will skip this question.
Okay, all right, Siddharth, we'll let you skip this one. But let's get to another question. Then we have Charu Jain, who writes to us from Patna. She holds 10 shares of Wipro, which he's bought at 500. She's making minor losses. She's asking if she should remain invested or switch to other stocks. Well, Siddharth, this is on the IT space. I was noticing that you're actually quite, you don't really have any picks in 2024 in the IT side, if I'm not mistaken. If you could just apprise us of what your thoughts are on Wipro and why is that the case?
Yeah, sure, Ekta. So basically, if you look at the overall IT pack, they have been underperforming, and rightly so, because there has been a lack of visibility, especially on the macros, since these companies have been focusing more on the export business and the key regions being US and Europe, where there has been an especially slowdown in the spends. The only silver lining that we see among the IT players is the strong order book. And December quarter being one of the leanest period and the slowest period, we will see the results coming out would not be that great. So I think the near term, at least 1 or 2 or more quarters of pain is something that we are seeing within the overall IT pack. And if you see Wipro among them has been quite an underperformer to their peer group because of the weak performance that they have been delivering. Recently, there has been some changes with regards to the management and in terms of delivery, which is kind of exciting the market. But right now, we would say that Wipro, we have a neutral rating. Within the overall IT pack, we would like something like an Infosys, TCS and Tech Mahindra.
Okay, all right. Any quick view on this one, Ruchit?
I would recommend to hold on for a pullback move at least towards 540. So, the stock made a high in November 2021, post which it was in a price-wise corrective phase. I think that's something which has been done with, and the stock is retracing this entire corrective phase. And 50% retracement of that entire correction is coming around 540. So hold on to the current levels, but around 540 if it comes, then take a review again on this one.
Okay, all right. Well, let's get in another question now. Swati writes to us from Chandigarh. She holds 20 shares of Ashok Leyland, which he's bought at 130. She wants to know what to do, whether she should actually remain invested or maybe book her profits, which she's sitting on. Well, Siddharth, what would you recommend on this one?
So, Ekta, we would recommend holding on to Ashok Leyland. It is another preferred picks from us on the from the overall auto pack. After the two-wheelers, we are positive on the CV cycle. We believe that strong growth would continue. We have a buy rating on Ashok Leyland with a target of 215, and we believe that the company would see improvement in its overall financials. Valuations are still comfortable, and demand environment is likely to be stable. Supported by improving pricing power and steady raw material prices, which should drive earnings from Ashok Leyland perspective. So one should hold on. We have a one-year target of 215.
Okay, all right. Bullish on Ashok Leyland, but for the technicals, do you have a target such as 215 odd rupees? What's your target, Ruchit?
So technical structure is quite positive today. In fact, we have seen a good price volume action too in the stock. But technically, the short-term targets would come around 200 to 205, which is the 138% retracement of the recent corrective phase which we have seen. So it's good to hold on at current levels rather than booking profit. At least 200, 205 should be seen in the near term.
Okay, well, just keep your eye out on the flashes from the Japanese PM with regards to a tsunami warning. Just keep the details out. That is basically what is being indicated at this point in time. Well, Rahul Dutt now writes to us from New Delhi. He holds 50 shares of PNB Bank, which he's bought at around 30 odd rupees. He wants to know what to do, what are the future prospects of his investment, and asks whether the stock will actually see an upside in this year. Well, a lot of the PSU banks have done well. Ruchit, do you expect that trend to continue into this year?
Probably yes. I think some large PSU banks should continue to lead, and stocks such as PNB also could see an up move towards 120 to 125 range. The kind of volumes that we have seen on the price up moves are quite good. Even at current levels, if you see, in spite of the recent run up, many of the PSU names are still witnessing a good buying interest. I think this should keep the momentum intact in at least early part of this year as well. So for targets around 125, I would advise to continue to hold on to long positions in this.
Okay, all right, Ruchit as well as Siddharth. Thanks very much for joining in and answering all of the queries. That's all the time that we have on the show. But do remember to email us your questions and we'll address them as always with our experts. Stay tuned. Closing bell up next.